That being said, yesterday the SEC charged 16 major financial institutions over, quote, widespread and long-standing record-keeping failures. So, Carlo, what are some of the key takeaways from this enforcement action?
So this was interesting because usually when the SEC brings a case and a settlement, or cases and a settlement that's that big, there's usually investor harm, it's big fraud, it's big manipulation. And so what was surprising here to many folks was that this was a books and records case, right? And an electronic communications surveillance.
A $1.1 billion books and records case.
Right,
Yeah.
So it's 16 firms. And that's just these 16 firms. There have already been settlements with other big banks and other firms in the same issues. This just happened to be one big bundle of 16 firms. And so people asked, why does the SEC care so much about the books and records rule, that they would take this kind of action? And I think, the way that the SEC thinks about it is their job is to protect investors and market integrity. And in order to do that, the fundamental rule of the SEC's rule book is firms that are registered with the SEC have to maintain books and records of their business and store all communications related to their official business, right? Why? Why do they have to do that? Because that way, when I was the director of the exam division, when our examiners come in to examine, we use those books and records to see whether or not the firm is complying with laws and regulations. If there's an enforcement investigation, they need to look at those books and records and look back at the trading records or whatever else 5 years to see what the issues were. And so if there aren't good books and records, it impedes the SEC's ability to protect investors and markets. So they decided to draw a line and send a clear message that this was unacceptable. And what was it that they were saying was unacceptable, right? It was pretty significant. It was big banks, all the names that we know about, not keeping proper books and records or storing electronic communications like they're required to for a long period of time, right? This went from 18 to 21, so over 3 years. And what else troubled the SEC greatly here was that senior executives, mid-level executives, frontline folks were all doing it, right? It was broad and it was deep in the organization. And so that is one of the reasons that I think they decided to take a really critical step here. And it was a big, dramatic step.
And it was like going through conversations that should be on the record, kind of in the books and records, but are in WhatsApp or something like that. Or
exactly.
Over text
so
message.
Traders, investment bankers were talking on their personal phones. They were texting on their personal text or WhatsApp or WeChat, and that wasn't being stored in the books and records of the firm. So that was the fundamental issue that the SEC was focused on.